After natural gas recently retested this low support of this channel, we have now seen that massive reversal to the upside. We have seen volume delta spiking up, and it looks like we are currently not only invalidating those resistances, we are also seeing a structural breakout out of this yellow channel here. And so obviously from the technicals, this does look quite bullish. But to actually understand the underlying drivers of natural gas, we have to take a look at the fundamental and macroeconomic drivers of this commodity. And so let's start right away by doing that. By the way, if you like this approach of taking a look at the past cycles and learn from them, please make sure to subscribe to our channel and like the video so you don't only miss future update videos, but also support us here on our channel. Now let's first have a look at the most important fundamentals of this commodity of gas, of natural gas. And what you do see here is a table of consumption and production measured in billion cubic meters. And this is, by the way, from the International Energy Agency, and it does beautifully show you the supply and demand statistics for 2025 and what is likely to occur for 2026. And so what you do see here in the total world is we have had from the consumption perspective 4,268 billion cubic meters of consumption, actually coinciding to less production. And so we have had a small consumption surplus. We have had more demand than supply, but this is about to reverse. This agency says for 2026 we obviously have a increased consumption. We do have this actually jumping from 4,268 to 4,371 billion cubic meters. But also production is increasing from 4,246 to 4,387. And so we will actually have a little bit more production than consumption. But obviously that is quite similar to what we've seen here in 2025. And we at Kronos do believe that production and consumption will not move the needle in 2026 concerning natural gas due to the fact that we do have quite similar values here. But what in fact will actually decide whether we're about to see a continuation of this bullish trend here on the weekly at natural gas is whether we're about to see the monetary policy being favorable or not. And so what we've opened here is the DXY and also the weekly natural gas chart here. And you do already might see this beautiful correlation that we have had in the history regarding the DXY. We have seen that those lows here at the DXY have actually always coincided to a top at natural gas. And you do see this cyclical formation here at natural gas, and obviously you do also see that happening to the DXY. And that's just another way to represent the business cycle. That's exactly what you basically see here. And obviously, weak monetary policy is leading to a weaker dollar and therefore to heightened economic activity and more demand for natural gas prices. That's the logic behind this chart. And you do see that playing out here in history. In fact, if you now have a close look to what happened here in 28, you may actually see a lot of similarities to what we're currently seeing. If you watch our videos closely, you do know we do have this scenario for a deeper macro correction or crash or recession in 2026. And you can beautifully understand this thesis by actually looking at what happened before 28. And if you have a look at the interest rates, you do see we have from the interest rates perspective, we do see that correlation here. You do see we have had those highs here in 28. We are currently seeing those highs here as well. Also, the cuts are starting to begin here. And in 28, we have also had this weaker dollar. We have seen that that actually building up this bubble that we've seen here, not only at equities but also at natural gas, at commodities in general. And obviously that was also driven by this change in monetary policy here. But you do also see that correlation with the bank's balance sheet. Obviously, we have had this big transition from a neutral stance here at the balance sheet to this balance sheet expansion, which actually injected liquidity that ultimately also led to this consolidation rather than this massive strengthening, this deflation. I mean, this was effectively a quite deflationary crash, and we are quite concerned this could actually happen again here to the dollar. But we do see also debt levels rising in the US. We do see that there are financing problems concerning the debt of the US. And obviously, that was a massive debt crisis that we've seen here in 28. And we of course do believe, and we do actually see a lot of signs that this could actually return, that this could actually repeat here. We obviously also have this rising natural gas price right now here. We do might have a bottom forming out here. We could see history actually repeating, also with a deflationary crash happening to the equities in the US. Obviously, that would beautifully coincide to what we've seen here in the history. We have also seen here in 28 that a deflationary crash occurred. We have seen the DXY rising, and that could actually lead to a crash at commodities, which will ultimately be reversed by this easing policies that we've also seen here in 28. And so obviously in the long-term perspective, we are quite bullish on natural gas. We do believe concerning this crash that a recovery will in fact actually send those prices higher again, as we've seen also here after the 2020 crash. But overall, we do have to keep in mind that there could be a deflationary crash happen, which ultimately would lead to a strengthened dollar and obviously a weakened natural gas price. What we are currently seeing seems to be what always tends to happen before those deflationary crash. We have also seen it here in 27, previous to the 28 crash, that natural gas has actually risen. And so we might see this actually continuing, not only with natural gas, but also with metals. So we're watching that quite closely, but we are still quite conservative concerning the fact that we do have those debt problems, and we do have those indicators, those empirical, historical indicators, and showing evidence that we could see, in fact, history repeat itself by a deflationary crash here in 2026. I hope you enjoyed the video. I hope you learned something new. If you did, please make sure to subscribe to our channel and like the video so you don't miss future videos, and also support us here for our work on YouTube. And if you want to join our community even further, please make sure to join our Discord server, which is also linked down below. Thanks for your support. See you the next time. Bye bye.